Hello, everyone. We are back from the previous discussion, and what an amazing session we have ahead of us. We have the honor to have Michael Shaulov. He is CEO of Fireblocks, and also Charles Walton. He is Senior Vice President of Identity at Avast. Welcome on stage. What an amazing session we have ahead of us. So please stay tuned and see you in a bit.
Daniel, thank you very much. And I would have to correct Daniel that the star of the show is in fact Michael. This is really about the topic of institutional adoption of digital assets, and really quite honored. The format we're going to take is a fireside chat with Fireblocks, and really, as Daniel mentioned, a fascinating topic. Again, I'm Charlie Walton. I'm a general manager for the digital identity business within Prague-based Avast, but that's a topic for a different session. We're going to take probably about 5 minutes of questions towards the end, and through the course of this, we'll really have a conversation with Michael and learn a bit more about this fascinating topic. Michael's the CEO and the co-founder. The company began in Israel. Michael's been really a serial expert in this arena. His company, Lacoon Mobile Security, was acquired by Checkpoint, spent quite some time there. But impressively, has prior to his commercial involvement, pioneered mobile security in an elite military technology unit. He's been honored by the Israeli government, the presidency, for his contributions there. So Michael, welcome today.
Charles, thanks for having me, and thanks for ABC to hosting this session.
Indeed. Michael, maybe we can start. I would love to hear more both about your background and the company's background in your words, if you could maybe start.
Yeah, sure. So I think you sort of provided a good part of it, or at least the first 15 years of my career or so. So really, I've been in the cybersecurity space for almost 2 decades, and as you mentioned, my previous company was acquired basically by Checkpoint, and I stayed there for about 3 years. I was heading their mobile and cloud security practice. And what happened in 2017, that essentially there was a cyber attack on a few exchanges in South Korea. So effectively, what we believe is the North Korean hacking group called Lazarus attacked those 4 cryptocurrency exchanges, and they were able to steal what was back in 2017 $200 million worth of Bitcoin. Now, I think I believe that Bitcoin back then was about $1,000, so people can just multiply the numbers. It's quite a haste. And we were part of that investigation team, and what we basically realized is that there was a pretty significant gap in terms of the infrastructure, right? That institutional players such as exchanges, trading firms, retail-facing wallets, and banks that were basically looking to get involved in this space had, and predominantly, I would say that what was missing is all the transactional layer to work with digital assets and with cryptocurrencies. So, if I'll take the audience back to 2017, 2016, 18 or so, the ones that were involved in the industry probably have heard about companies like Zappo and BitGo, and basically where those companies, what they built, it was a very effective cold storage solution, right? So you can basically place your assets in what was basically a disconnected internet air gap disconnected wallets, right? So there was no connection between those wallets to the internet, and they were basically spreading the key material, the private key, across bunkers and different military facilities in isolated places in the Alps, and then when you wanted to create a transaction, you basically had to sort of bring that key material together, sign a transaction, and release the transaction to the blockchain, which is highly secure, but as everyone can appreciate, it's a very cumbersome and complicated process that sort of undermines the narrative of blockchain and digital assets and cryptocurrency as being the Internet of Money, right? So if we sort of like fast forward,
and it sounds like it doesn't scale very well either.
Yeah.
Yep.
Yeah. So it took people like 72 hours to do transactions, and because of that, right? Really, all those exchanges that were implementing their own hot or warm solutions, right? That allow them to interact with the blockchain directly. So when people want to withdraw money from an exchange or they want to send it to a counterparty, they're not going to wait 72 hours, right? So those exchanges and all the players had to figure it out by themselves of how to create an internet connected storage that is programmatic, and that exercise usually went down very poorly, right? Because a lot of the people that were trying to figure out themselves got eventually either hacked, or they had a very cumbersome and non-practical policies and procedures that they had to put in place. And this is basically where we stepped in and figure out a solution, which became Fireblocks, to initially solve the pain point for people to be institutional but connected, sort of bridge the gap between security, convenience, and speed, and provide them an institutional grade custody solution and also a network through which they can transfer those assets.
Got it, Michael. So it sounds like the real advantage in Fireblocks, and as you really got this thing going, is this combo of getting this balance of speed, convenience, and security. That's kind of the unique advantage of Fireblocks. Is that true, or are there other things, or did I get it right?
Yeah, I mean, I think that this is where we start, right? When we started 3.5 years ago, I think this is essentially what we were able to crack: the convenience, and the speed. So basically, allowing those funds to be generally available, to be able to allow people to sign transactions very quickly, but also to remove the friction in terms of how those assets are being transferred from counterparty to counterparty, because a lot of the issues that people had were actually around identity, right? So the problem was that because it's an open ecosystem, anyone can create a wallet. A wallet is just a random number, right? How do I know that I'm sending the funds, the cryptocurrency to you, right, Charles, and not to some hacker that basically phished me or man in the middle our communication and basically redirected to their wallet. And that basically became the second part of the solution beyond the custody technology, the Fireblocks network. Over the last 3 years, we basically, we expanded the solution significantly from that point, and we built a whole layer of institutional APIs, policies, backend integration, that today it's almost like a crypto backend as a service, right? So if you are if you are a company that or a financial institution, an e-commerce company, an online business, and so on, that wants to gaming, we see a lot of gaming companies nowadays that are coming into the space. If you want to build cryptocurrency capabilities, we are sort of a one-stop shop to give you all the secure backend.
Got it. And where, maybe if you could describe again a little bit more about where you see institutional adoption of digital assets being currently. Where's the market? Where's the customer pull? And where do you stand on the development curve in serving them?
I think that we probably, if you sort of think about the innovation adoption curve, right, that I think we are now at the early majority, right? So I think we passed the innovators, we passed, I think, the early adopters, and we sort of starting to touch the early majority. And by that, I mean that we have a very diverse group of institutions that are looking into cryptocurrencies. So I think what most people are familiar with is sort of the pension funds, more of like heavyweight institutional investors that you occasionally see in the news, that they are buying 100 million, 500 million of Bitcoin. But in reality, it's actually a much more diverse, right? So We have a lot of hedge funds, right? We basically have a lot of trading firms that have been in this space for a while, and we're actually seeing on the hedge fund side this moving from, I would say, purpose-built or dedicated crypto hedge funds, that we're actually seeing quite big hedge funds and asset managers that are starting to allocate and trade crypto. We are seeing a lot of the neobanks. So before that, it was really you had to go to Coinbase, you had to go to specific cryptocurrency exchanges like Bitstamp and so on to trade crypto. Now there is a convergence. You actually see all those fintechs, neobanks, so PayPal, clearly, Revolut, Robinhood, Square, and almost any fintech company that we are seeing and interacting with has now a strategy for crypto toward the end of 2021, first half of 2022, right? So we're going to see all those retail wallets being enabled in the regular app that you would use for your finance. Then we have the banks. So a lot of the banks are now jumping in and establishing capabilities. We had some early entrants in specific jurisdictions like Switzerland, but now in the United States, even we're seeing banks like, from the top banks like Bank of New York Mellon that are looking to launch capabilities next year, to some of the more fintech banks like Cross River and Solaris in Europe that are in this game. And then I think the most exciting part, to be honest, is actually all those things that are not fintech or finance, right? Because we're seeing gaming companies sort of looking at what Axie did in the gaming space, and they want to jump in. And gaming companies inherently, it's sort of like the intersection of gaming and the metaverse, right? So if you think about gaming companies, they already have all those assets digitalized. They have an economy in most of those games. They have digital currencies. They have virtual goods. But so far, it was all confined within the game itself. And what actually was able to do is to sort of show people, hey, if you open up the ecosystem and you ride on those rails, you can actually build a much bigger ecosystem with NFTs and that kind of stuff. And we are seeing most of the gaming companies and all people that are looking to do things in the metaverse, and a lot of other companies in this, streaming space, content creation space, and so on, want to leverage NFTs, want to leverage stablecoins. And, for me, this is actually some of the most exciting stuff because it shows you how native it is to the internet.
No, exact. Really a fascinating area. And Michael, you mentioned Revolut earlier on. Could you tell the group about what you're doing with Revolut, the relevance to them, to you, and how this is progressing? It sounds to me like a great case study.
Yeah, Revolut is definitely one of our best case studies, and I think a lot of the audience here, at least the European audience, very familiar with Revolut, which became sort of this fintech powerhouse globally, really in Europe, and I think they are one of the largest neobanks. So Revolut was actually fairly early to the cryptocurrency game, that they basically put some capabilities online in their app that you could buy crypto in their wallet, some form of experience. And over the last year and a half, they really wanted to start. They really wanted to start expanding the capabilities over there, right? So what does it mean expanding? Before that, you can only buy and sell, right? So you didn't really able to use the Bitcoin or cryptocurrency or Solana, whatever you were buying over there. You can only buy and sell it. And they wanted to expand those capabilities. So what they used us is for twofold. One is to basically using the Fireblocks network to build all their rails for liquidity. So give people better prices, to source from more marketplaces the coins that they buy and sell, and just to scale up their operation to the demand that they start to see over the last year and a half. But in parallel, they also were able to really make important features, right, that were not available earlier. So for example, for platinum users right now, they allow to withdraw, right? To withdraw, that you can actually take the Bitcoins that you have or the crypto that you have with Revolut, and you can send them out, pay, transfer it to a different exchange and so on. They're also working on staking, and they're working on other capabilities that are going to be launched soon. And essentially all the infrastructure to do both the ability to scale what they had earlier, but most importantly, to start driving new use cases, to start providing new products to their clients. It's all being done on top of Fireblocks because it allows them the programmability of the infrastructure that they need, and it provides them the compliance, and it provides them the security.
Got it. Really, really cool. Michael, any other points to make, I suppose, with respect to cases around decentralized finance or payments? Is there anything we haven't covered that you may want to comment on with respect to those use cases?
Yeah, I mean, I think one of the exciting things that we're working on right now is really to bring DeFi to the institutional market, right? So for those who are not familiar, decentralized finance is something that had a really huge impact on the ecosystem in the last 18 months or so. And those protocols really allow customers to interact with the blockchain and interact with financial applications in a way that was never feasible before DeFi, right? It basically opens it up. It's sort of like, for me, it's almost like the open sourcing or the app store, right, for financial application, that anyone who has an idea, they can deploy it. The problem for most financial institutions is that it's too open, right? So it's unsanctioned. Basically, anyone can interact with it, and therefore, for financial institutions that have licenses, such as money transmitter licenses, or they are licensed custodians or licensed banks, that introduces a problem because they have regulatory obligations, right? They need to do KYC, and they need to assure that the party that they're interacting with is not on the sanction list, right? Or is not, there is no sanctions that are enforced on that entity. Otherwise, they can basically jeopardize their license. And because DeFi right now, you interact in an anonymous way, they couldn't participate in that. So what we basically created is one of the first flagship project is a project called Aave Arc, which is the first sanction market or the first permission market, in which through the Fireblocks network, we deploy the identity into the protocol and guaranteeing that the participants in that specific pool are KYC'd, their identity is known, known in a sense. It's not always known to when you transaction, but at least it's guaranteed that the level of participants in that pool is above the compliance level of the other people that are participating, and therefore it allows licensed institutions to start working with DeFi, which is really exciting because, as an example, in DeFi, if you convert USD to a USD stablecoin, you can generate somewhere between 4 to 6% yield, right, per year. Clearly something that you cannot do right now in a bank, right? I think in Europe you have negative interest rates in most places. So this is a very interesting and exciting area of development that we are pushing hard on. There are other protocols that we are looking to bring into this kind of permissioned, compliant ecosystem, which we believe will unlock even more and more participation.
And on payments, Michael, it seems that there's clearly some value in cross-border. What else in the payments arena? Where does that begin heading? Yeah,
so on the payments arena, we are working with quite a few payment providers right now to enable them to, for example, do payouts. So it's mostly right now on the B2B side, where most of the interest over there is really leveraging stablecoins, right? Because as an example, we as Fireblocks, about 30% of the invoicing, or basically the payments against the invoicing that we do, we actually receive in stablecoins, rather than through a credit card or ACH or a wire. And the reason for that is that assuming that you use stable coins that are riding on blockchains that they have fairly low fees, gas fees, it's super cheap. It's cheaper than any other payment method from what you pay for processing. It's extremely fast. It works 24/7. You don't have any cutoff times, and it's extremely efficient, especially in the cases that you have cross-border transfers, right? Because when you do cross-border transfers, it's not sometimes takes you 2 to 3 days. You need to deal with reconciliating it. Sometimes those transfers are bouncing back. Yeah, with stablecoins, it's so simple, especially when you do that over the Fireblocks network. So we already have quite a few clients that are leveraging this technology to streamline international payments, payouts, and so on. I also believe that in 2022 we will start to see some of this propagating to the retail side, to consumers, because we're starting to see the infrastructure being built over there. Some of the people might have heard that finally Libra, DM, and the entire Facebook sort of initiative have launched using the Paxos stablecoin. It's now available as a beta in WhatsApp. So I think we are sort of on the cusp of this propagating to the mass retail market.
Yeah, cool. Got it. Listen, we got a couple of questions, and maybe we can take them, and I want to give you a moment right at the end to give you a view into the crystal ball for the next few years. But the first one was more of a market question, and in terms of customers that take care of custody by themselves versus those that are dealing with licensed custodians. Any comment on this kind of market setup matter?
Yeah, so I think that what we see both, and I think it really depends on some of the regulatory obligations and the regulatory licenses, right? So, as an example, in Germany, where there is a fairly clear BaFin licensing, in order to be a custodian, you actually need to have a license, right? Otherwise, you cannot hold crypto for other people. You can hold it for yourself, so you can directly custody your own funds. But we see both. In the United States, as an example, most of the institutions that we interact with, they are quite comfortable with direct custody, so licensing in themselves, custodying themselves using platforms like Fireblocks, right, where you do direct custody. Although there is also the notion of a qualified custodian, and then usually we have quite a few custodians, such as banks and trust companies, that are using our platform, and then they are able to operate as a qualified custodian and custody funds for other institutions.
Got it. You mentioned regulation as a matter, and I know there's another question from the audience, and it's really, how do you see the regulatory environment dealing with digital assets? How quickly is it going? Is it going quickly enough? And are there countries out there that are kind of doing the right thing in that respect?
I think it's definitely going into the right direction. There are countries that I think the most important thing right now is actually clarity, right? That's what makes things complicated and inconvenient for a lot of players, especially in the institutional side, because institutions like clarity, they don't want ambiguity in terms of what they allowed to do or not allowed to do, right? Because then they can find themselves on the wrong side if eventually the clarity is different from the ambiguous situation, right? There are countries that have a pretty clear regulations at this point. So, for example, Switzerland, Germany, Singapore, and so on. There are countries, for example, the United States, that given the amount of regulatory bodies that exist, there is still somewhat of a commotion in terms of what is the regulation. Although there are efforts right now that are on the government level to really create and standardize it.
Great. One more question quickly, Michael, is really on the risk of crypto self-custody and really the risk associated with loss of private key. The person in the audience was wondering how do you view that risk on digital assets?
Yeah, so I think that there are many different forms of what people think about self-custody. So originally, when people thought about thinking about self-custody, they think about using a ledger nano, right? Which is sort of, or a treasure, which is like a disco key that they have themselves. And that's what people have in their mind is self-custody. And then, of course, how do you back up the private key is something that is left for the user, right? You write it on a piece of paper, then what is called a mnemonic, and then you put it in some kind of safe, or you put it on metal steels. I think that the more advanced solutions right now, for example, what Fireblocks is doing, and other, for example, retail companies like Zengo, is leveraging MPC technology. So through the MPC technology, you actually distribute the private key in a way that there is no single point of failure, right? And effectively, the backup of it is much more streamlined because we, for example, on our side, are able to back up all the information, all the private key encrypted, and also create schemes in which you have an escrow, another party, right, that can hold part of the private key in the case that one of the parties fails. So
really using smart crypto plus escrow really is the answer. And I'm sorry to cut you off. I want to give you just 30 seconds. Where do you see the future? Where are things, the exciting stuff coming up? You mentioned retail prior, but anything else in about 30 seconds? We got to wrap up.
Yeah, I think it's the convergence of basically payments and DeFi, right? So this is where things are going, and we'll throw there also the NFTs, right? So this entire integration of being able to pay in a native way over the internet, have financial applications that are native to the internet, and also the ability to tokenize content and tokenize the things that we are consuming on the internet. I think that this is sort of 2022, 2023, and I'm very excited about what's going to happen there.
Michael, it's been real fascinating. A great talk. Good luck to you. You're onto a great track. And with that, I wish you a good day. Daniel, back to you.
Thank you so much.
Thank you, Michael. Thank you, Charles. It was a lovely discussion. Very futuristic, but it's indeed a thing in the present, not only in the future. So DeFi and all this finance going digital is already a reality. So thank you so much for sharing all your valuable insights from the industry. And just for you to know, as I saw, there were a lot of still questions to be answered. Michael and also his team have a virtual stand in the conference, so you can reach out to the team and have your questions answered. A pleasure. See you around.
Thank you so much. Thanks, sir.
Bye-bye. Bye-bye.